starting to push back. Folks, I don't know if you saw this, but obviously the market has been pricing in somewhere between a 25 and 50 basis cut in September. It is now the Fed's job to push back and push back hard. I don't think the Fed wants to be a foregone conclusion. What am I talking about? Well, Fed President Michelle Bowman still sees inflation risk and continued strength in the labor market. Should we have inflation continue to fall, rates obviously need to be lowered to prevent from becoming more restrictive. What does all of that mean? First and foremost, I don't think it should be shocking to anyone that Michelle Bowman has taken on the role of being a hawk, right? You have doves and you have hawks. It is pretty clear that Michelle Bowman is the most hawkish of the Fed presidents. She is used as the mouthpiece to kind of, yank the market one direction or so. So again, what is Michelle Bowman really saying? What is she saying that you and I could watch? I think it is pretty clear. Michelle Bowman is saying, watch inflation. And specifically, I think she is saying, watch inflation this week. Why? Why do I think that? Again, she admits that if inflation continues to fall, then it would become, the Fed would be more restrictive today and thus have to cut. I think what she's saying by her first line, inflation risk and continued strength in the labor market, right? She still sees that. I think Michelle Bowman is saying, and actually I said this yesterday, I think inflation might surprise to the upside. It might surprise to the upside. Now, again, when you look at commodities, when you look at kind of the other sectors, when you look at rent, right? Owner's equivalent rent, the numbers should be coming lower. But inside CPI, we have all of these extra things which can distort the numbers, like insurance. I believe, and I'm out on a limb here, that the Wednesday CPI reading will be slightly hotter than expected. Why is that important? Frankly, it's important because it breaks trend. What has Jerome Powell told us over the last 15, 16 months? Jerome Powell has told us that he wants the data and he wants to see a trend. So if the August report has a tick up in inflation and then September has a tick down in inflation, will a single reading be enough for the Fed to cut in September? I think according to Michelle Bowman, the answer to that question is not unequivocally yes. The market is still pricing in at least a quarter point. It is a coin flip between 25 and 50. I think we all should acknowledge that the market has been wrong all year, right? Mr. Market was pricing in 7 cuts in January. Now pricing in 3 cuts, right? They're actually pricing in a 25 basis point cut in September, in November, and in December. They're actually pricing in 150 basis points of cut by the summer. I'm with Michelle Bowman. I think there is a chance that we get a higher inflation reading on Wednesday. September will be lower, but I'm not in the camp that a cut in September is a foregone conclusion. Other stuff going on in the news. Shout out Lance Lambert and Resi Club. If you haven't joined Resi Club, they put out 5 free articles a week. They are the #1 data source for all things real estate, in my opinion. 41 of the top 200 largest real estate markets are now above pre-pandemic levels. Folks, the housing market is starting to heal itself. In my opinion, that is wonderful news. The housing market is healing itself because these high rates is keeping demand bottled up. You know my fear if we get 100 basis points drop in rates to something like 5.5 or heaven forbid 5, that marginal demand will not be held back. I like seeing inventory build. I am an investor. If you watch my channel, you're probably an investor. We want a slower housing market. We want to write disrespectful offers. We want to negotiate closing costs. We want the seller to buy points. We want them to do the repairs. We need to ask for the moon. Buyers markets do not last forever. I believe we have a 6-month window where it will be a buyer's market. We need to get through the end of the year. There's a lot of noise and the consumer's like, I'm out, time out, this is crazy. So again, 41 of the top 200 markets are now above 2019 levels. And frankly, that is a good thing. We need more of that. Shout out, I think I got this one from Altos Research. Active inventory is now up 40.2% year on year. Again, I see that as good news. More inventory, more choices, more motivated sellers. You get the drill. We want a slower housing market because that is good for us. Week on week, inventory still building quite nicely at 1.3%. It's really interesting when you look at inventory build 1.3%. Is that more new listings or is it less demand? In my opinion, this is far more about demand being less because I have not seen a rapid increase in listings. It's just the same amount of listings, less demand, inventory builds. That is what I believe is going on. And again, that is good news. Folks, do me a favor. I want to hear from you. 125 of you right now are watching live. Thank you. I appreciate each and every one of you. I am curious, of now the 128 watching this, how many of you are coming to our Vegas event, February 15th and 16th, 2025, 2 full days, 6 hours of networking, 12 speakers. Let me know in the comments below who's coming, who has bought their tickets already. I'm just curious of the folks that watch me live or watch this on replay throughout the day, who is coming to Vegas? Looks like we've got Dennis coming. I see that. Thank you, Dennis. That is awesome. Hopefully more of you out there will be coming. Oh, all-nighters coming. Well, with the kids. Oh, look at that. Look at that. Kyle. Oh, we got a maybe. That's okay. Yep. Angel's coming. Uh-oh. Can't make it this year. Oh, I'll be in Guam. Well, that's okay. You're going to be in Guam? That's a long commute. Old Gary is coming. You guys are amazing. All right. Let me keep going. This should be fun. So what else is going on? Bank of America CEO, research team says, you know what, folks? We don't see a recession. Bank of America team has been calling a recession the last 2 years or so. They now are saying, we do not anticipate a recession over the next 12 to 18 months. They are also saying a soft landing may have been achieved. Is good news? Is good news or is good news bad news? Right? Where are we all of this? So again, Bank of America is declaring victory, soft landing achieved. This would be the first soft landing, I think 1994. I think 1994 was the last soft landing. Is it skill? Is it luck? Is it a little bit of both? Probably all of the above. Conference board says 70% of CEOs do not anticipate a recession in the next 12 months. So we got Bank of America's and the conference board saying no recession. You know what's interesting about the conference board? A year ago, 29% of CEOs said there is no recession. So that is more than 100% increase in CEOs feeling better about the economy. Why is that good news? Well, folks, I have the last 5 to 8 years of my career, I routinely interacted with CEOs and CFOs. And when CEOs feel good, i.e. 70% do not see a recession, they are hiring, they are deploying capital, they're deploying risk capital looking for a return, they're doing acquisitions, they're doing all of these things. So again, the conference board, again, according to the CEOs, no recession coming. Again, Bank of America's research team, no recession coming. Again, I like to stand put. I'm still calling a backward dated recession to June or July of 2024. I do believe it's the rolling recession, which again, we are not used to. It is not normal to have a rolling recession. So it will be very interesting for you and I to sit back in February or March and see what, if anything, the economists say about this year. It's pretty wild. Mohammed El-Arian is talking about the Fed making a gigantic mistake if it lets the stock market be bullied into rate cuts. Folks, I want to rewind the clock to last Monday. Last Monday, the markets were tanking right about this time, 1,000 points, 6%. The world was ending. And we had Jeremy Siegel coming out saying the Fed's got to cut 75 basis points. Folks, first and foremost, the Fed does not care about you losing money in the stock market. It does not care. Stock market wealth is not in the Fed's purview, right? Stable prices, full employment. Doesn't say anything about you losing money in the stock market, Jeremy Siegel. Again, what Mohammed is really pointing out is if the market tanks again and the Fed is bullied into cutting rates, it would be a gigantic mistake. I absolutely agree. You've heard me talk about since Jackson Hole 2022 that the Fed put is what Jerome Powell wants to beat. Jerome Powell will fight tooth and nail to not cut rates because of stock market losses. Folks, I don't know if you are a part of our school community. You should be. You should be. We had yesterday's accountability group. Shout out the team running that. We have the topics were, shout out Jared for doing that. Disrespectful offers. We talked closing cost, NAR settlement, software investors use, the goodness of the community, seller financing scripts, commercial lending, and the difference with residential. Folks, we have two accountability groups, one on Sunday led by Jared, one on Wednesday led by Frank. Again, Sunday afternoon and Wednesday evening. If you need to be in the group with the right people, join the community, join the calls, ask questions. You will be amazed at the go-givers in our community. You need these set of friends to keep moving forward. David Roche, hopefully pronouncing that correctly, David Roche warns that a stock market will enter a bear market in 2025. I don't know if you guys watch Dan Bird on every Sunday, but he would agree with this in my opinion. Dan Bird has been warning us about 2025 and the stock market being a bear market. A bear market, what would you call it? A secular bear market inside a bull market. Again, not my area of expertise. That is his. But yes, according to David Roche, smaller than expected rate cuts, an AI bubble, and a slowing U.S. economy will all lead to a bear market in the stock market in 2025. Other notes I have. Oh, how about this? This is an interesting one. 59% of U.S. consumers think we are in a recession. That is always interesting to me. Again, I've studied the consumer for 30 years. And the consumers are really weird, right? When you look at the consumer base in mass, the consumer can feel one way. 59% of us think a recession is here. They could feel one way, but they could act a different way. What might you be able to look at? Well, I think it is on Wednesday. It might be Thursday. I think it's Wednesday. We get retail sales. If retail sales are up, we have the classic consumer behavior. We feel we're in a recession, but we are not acting like it. If you feel like you're in a recession and you are truly nervous, you will cut back on spending. Retail sales will be negative. If you think everybody else is in trouble, but you are feeling good personally, you will continue shopping and retail sales will be up. This is going to be a very important week. I'm going to round it up. 60% say we're in a recession, but are we actually spending like we are in a recession? We will know more on Wednesday. Alrighty, folks, we got to do our thing. We have to congratulate some people doing the work. I want to congratulate Ray. Ray is getting 2 cards. Ray got his first deal, got a golden ticket, and he got his second deal. So Ray, congratulations for doing the work. Your cards will be going out in the mail. Kyle, congratulations for getting your next deal. I think you have several of these, 5 or 6 if I'm not mistaken. Congratulations for getting your next deal. And one more, Michael, congratulations for getting your next deal. Folks, if you don't know what these are cards that I send out recognizing you, the investor, for doing the work. You can only ever get one of these. These are called golden tickets. If you get your first deal, I want to congratulate you. Then there are these black cards, folks. Go ham. If you end up getting 15, 20, 25 of these, great. I want to encourage you to move forward. But remember, folks, at one rental at a time, our goal is to get to 4. If you get to 4 and you decide to keep going, you can go to 10. We are not talking about hundreds and thousands of units. We want to keep it practical. We want to keep it down to earth. Folks, I hope to see you in Vegas. And don't forget to join school. We are building something very unique with an amazing set of individuals, go-givers. You want to be in the community. Introduce yourself. Don't be shy. Remember, one of the ORAT goals, you got to meet 2 new people a week. You want to cheat? Join school. There are 227 members already. Join school. You won't be disappointed. And hey, if you don't like it, cancel. It's only a $20 commitment once a month. All right, take care. Later.